Welcome to Alpha Recap. Thanks for tuning in. We're coming to you after the close on March 9th, 2026. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, good to be back. Big day. Markets closed mixed with a pretty clear split between winners and laggards.
Right. You could point to three big storylines that dominated the tape: AI infrastructure and funding news, battery material and lithium deal flow, and a fresh push to productize crypto for institutions.
And those winners were concentrated. It wasn't a broad market charge. It was more like a handful of themes leading the way while other sectors treaded water or slipped.
Exactly. So let's walk through what moved the market and why investors should care. First up, technology and AI. Mobile World Congress brought a bunch of AI infrastructure funding and product headlines, and that pushed sentiment for companies building the stacks. Think data center tools, specialized chips, and the management software around that.
Yeah, that tracks. The market has been rewarding the infrastructure players more than consumer apps. When you're selling the plumbing that runs AI, you get a different investor math.
So for listeners who might be new to this, infrastructure means the physical and software layers that make large AI models run. Servers, cooling, networking, chips, and the orchestration software that schedules workloads.
Right. In plain terms, it's the stuff you need before an AI app even runs. And that demand ripples into data center real estate and industrial equipment makers.
Quick reaction. Now the crypto angle. Coinbase launched regulated futures across 26 European countries and paired that with some market development moves, while Nasdaq struck a partnership with Kraken on regulated infrastructure.
That's a big deal. Institutional rails are critical. If custody and product structure look cleaner, more big pools of capital can get comfortable allocating. Cautiously, of course.
And Aave reported record on-chain activity, which fed the narrative that product maturity and adoption are increasing.
But caution, regulation is still binary. One enforcement surprise can undo enthusiasm quickly.
Totally. Now, materials and mining were another leadership pocket. Trafigura-style offtake deals and project advances for lithium and battery metals put some miners and processors into play.
Investors liked that because offtakes reduce offtake uncertainty. They create clearer revenue pathways and make financing easier for projects.
But we also saw a reminder of why you can't paint the whole energy transition chain with one brush. SK Battery America announced workforce reductions of nearly 1,000 people, signaling near-term demand softness for some battery makers.
That split, big expansions in chemicals and materials on one hand, layoffs at a battery plant on the other, that was one of the day's biggest contrasts. Short reaction.
Right.
So let's call out a few headline moves and why they mattered. First, Shintech confirmed a $3.4 billion expansion in Louisiana.
That's a huge commit. For industrial investors, that signals confidence in U.S. petrochemical feedstock advantages, and it's a big win for capital equipment suppliers, contractors, and logistics providers.
But it also raises concentration and permitting risk. Big greenfield projects attract regulatory scrutiny, and they take years to roll out. So investors should be mindful of execution risk, even if the demand story is sound.
Next up, Coinbase's EU move and the Nasdaq Kraken tie-up. That lowers certain institutional frictions.
Lower custody and counterparty friction makes large inflows more plausible. But again, it's jurisdiction by jurisdiction. Not every country will behave the same way.
Trafigura and battery metal offtakes. That's the third big item. Practical outcome. Midstream players are trying to lock supply ahead of expected demand, and that can tighten pricing for key metals,
which favors miners with permitted, financed projects that can scale quickly. But if EV demand softens, you can see a price correction just as fast.
And then there was the retail angle. Costco said personalization drove about $470 million of e-commerce growth, and Target confirmed progress toward 2,000 stores.
That's an encouraging read for brick-and-mortar retailers who are using data to boost online sales. It's a reminder that physical networks still matter if you can link them to better digital experiences.
One short reaction.
Yeah, absolutely.
Let's pivot to policy and regulation. It showed up in a lot of places today. State-level cannabis bills moved in Virginia, Texas tightened hemp THC limits, and FERC, the Federal Energy Regulatory Commission, signaled procedural adjustments around NEPA, which helped some utility project visibility.
Policy was a theme everywhere. Crypto product launches only work with regulator buy-in. Cannabis remains a state-by-state puzzle, and the permitting needle at FERC matters for storage and transmission projects.
Okay, let's summarize how sectors behaved. Outperformers first. Technology, especially AI infrastructure, crypto on institutional product headlines, and materials and mining thanks to offtake and deal flow.
Underperformers were energy, jittery because of Gulf geopolitics and G7 release chatter, plus finance, which got hit by legal and oil-linked credit concerns, and industrials, where the signals were mixed.
And stable or mixed areas included utilities, which held up thanks to yield and clean build-out stories, real estate, where data center demand offset some political noise, and healthcare and consumer, both of which had pockets of strength and weakness.
Quick aside. Short reaction.
Got it.
Energy's volatility is the kind of macro risk that can blow up a steady portfolio.
Yeah, that was my thought too. Geopolitics in the Gulf and talk of coordinated crude releases from the G7 kept oil-linked names on edge, and that fed into banks and insurers with energy exposure.
Let's walk through the cross-sector themes quickly. These are the correlations investors should be watching. 1. AI is the connective tissue. It links tech, industrial equipment, and data center real estate. 2. Battery and EV supply chains connect materials, industrials, and autos.
3. Regulation is cross-cutting. Everything from cannabis to crypto to utility permitting can reprice expectations quickly. 4. Geopolitical risk is recoupling with commodity markets. And 5. M&A and big capital deployment are deciding winners and losers in a low-growth world.
Short reaction.
Yep.
And if you like concentration, this is your market. A few themes are doing most of the heavy lifting.
All right, time for actionable insight. The practical stuff investors asked us about. First, favor AI infrastructure and differentiated software, but pick quality. Strong balance sheets and secular contract wins are key.
2. Be selective in batteries and materials. Offtake deals are a vote of confidence, but balance supply-side progress with demand signals. Remember the nearly 1,000 job cuts at SK Battery America?
3. If you're using regulated crypto channels to get exposure, do it cautiously. Prioritize regulated custodians, diversify product wrappers, and size positions for volatility.
4. Rotate defensively into utilities and high-quality data center REITs where policy clarity exists. That can help hedge the wider market risk from commodities and geopolitics.
5. Hedge energy exposure and bank risk tied to oil shocks. Short-duration hedges or option overlays can protect you from sudden crude spikes.
6. Treat cannabis as a regulatory play. Wins are state by state. Focus on operators with diversified footprints and low cash burn.
7. Follow macro and industrial indicators to time exposure. Shintech's $3.4 billion move matters, as do freight rates, industrial orders, and semiconductor equipment orders.
Good checklist. And remember, position sizing matters. With concentrated leadership, you don't want a single theme dominating an outsized portion of your book.
Let's highlight risks to watch over the next few weeks. 1. Geopolitical escalation in the Gulf. 2. Regulatory reversals in crypto or cannabis. 3. An AI sentiment shock tied to a large investor. 4. Battery demand normalization. And 5. Permitting outcomes at FERC.
Those are the catalysts that could reorder the tape quickly. Keep an eye on institutional crypto flows, follow-through from Mobile World Congress on AI adoption, materials financing notices, and any oil market flare-ups.
Before we wrap, a couple of quick takeaways. 1. March 9th reminded us that winners are concentrated. AI infrastructure, selective materials, and institutional crypto moves led headlines. 2. Downside still comes from old-school risks, geopolitics, and regulatory rulings.
3. Be disciplined. Overweight high-conviction names with visible cash flows Hedge broadly with utilities and quality REITs, and keep powder dry to rotate when valid demand signals come through.
And 4, stay close to the calendar. State cannabis votes, FERC announcements, and EU crypto rules are the things that will move prices quickly.
Final quick reactions. Right.
Okay, that's our recap after the close on March 9th. If you like this, or if something we covered raised questions, head to stockalpha.ai. You can ask us directly at the Q&A feature and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be watching institutional flow data, MWC follow-through on AI product adoption, materials project finance headlines, and any geopolitical headlines in oil-producing regions. See you next time.